Hello, everyone. Welcome back to the Daily Gold YouTube channel. Thank you so much for tuning in. Today is Tuesday, November 26th, 2024, and I got a Macro Mondays for you. I know it's Tuesdays. This is a delayed version of Macro Mondays, but real excited to do this video, record this video, I should say, for you guys out there. First, if you haven't already, please hit that subscribe button, hit the like button. Would really appreciate it. Got a lot more great content coming to the channel over the weeks ahead and into the new year. Really excited about that. But enough about that. Let's get to the video. And because the reality with respect to correlations in gold and Bitcoin, Bitcoin is the most correlated asset of all time, and gold is the most uncorrelated asset. So I've got a couple charts here. Let me get into it. So I like to look at things from a bird's eye view, a 50,000 foot view. I think when we're looking at markets and analyzing, we really need to understand where the secular trends are, where the primary trends are, etc. So that's how I work. I know that when people are looking at correlations, they kind of look at the last year or maybe 2 years. They look at some correlation statistics, but that doesn't give you the whole picture. My opinion is you need to step back and look at everything in a secular or even a historical context. So in this chart, we're looking at the S&P 500 here, total return of bonds here, gold, and Bitcoin. And so the yellow here are secular bear markets. So here are the secular bear markets for the stock market. Bonds here, this one started in 65, and this one started here in 2020. Now, this is based on the 80-month moving average, where the total return of bonds, I think in nominal and probably in real terms, it loses the 80-month moving average. So I left off the moving average so the chart would be more visible. I included the 40-month here for the stock market. If you followed my videos, you know that that's the demarcation line with respect to when does the secular bull end. And so we can see here numerous times, other than the COVID crash for a month, the market has held above the 40-month moving average. Of course, it did here beautifully nearly the entire time. So secular bull here. Bonds have tipped into a secular bear. Gold, as I've said in other videos, we have not got the confirmation with respect to gold outperforming the 60-40 that it's in a new secular bull market. But I mean, it's fair to say with a breakout here of a 13-year range, this cup and handle pattern, this was a secular bear here. And this opinion is bolstered by the fact that silver and the gold stocks really performed very poorly during this period. So gold in a new secular bull, we can say that, hasn't been confirmed yet. The confirmation is important for the entire sector. And of course here, this was the massive, long secular bear in gold that followed a true bubble here. So, we're thinking about most uncorrelated asset in a big picture sense, it's really gold. Because if you have a secular bear in stocks, you have a secular bull in gold, and we can't see the gold stocks. I didn't include those, but because gold was fixed, gold stocks had a huge move, 29 to 37. So secular bear in stocks. Again here, here's gold here, secular bull in gold. Secular bear again here, secular bull in gold. And, bonds, my point here is based on the secular relationships. Gold is even more uncorrelated to the stock market than bonds, because we know, I just pointed out here how we had secular bull and gold here, secular bull here, secular bull. Now, here you had a secular bull in bonds based on total return. Same thing here in this period, 2000 to 2009, 2011, depending on how you measure it. But here in the inflationary 60s and 70s, this was a secular bear in bonds. So from a big picture secular trend sense, gold is even less correlated, or I should say, I'm repeating what I just said, but gold is more uncorrelated to the stock market than bonds are. And we are going to see that because we're getting into a new inflationary period, and bonds have already rolled over. They're in a new secular bear. Stocks will eventually follow. And so, and as we know, gold here is breaking out, and then we're just waiting for that confirmation, gold against the 60-40. Now, I haven't even mentioned Bitcoin. So what has happened during this secular bull in the stock market? Look at Bitcoin. Look at this. I mean, it's even, I got data going back to the end of 11, but it even was lower here. So, I mean, look at this huge move in Bitcoin. I mean, this is just a NASDAQ proxy. This is not an uncorrelated asset. That's total bullshit. That's so lazy when I hear that. And it's in all the Bitcoin marketing materials. Oh, uncorrelated asset. I mean, I'm sorry, but F you. Do your research. Like, this is the most correlated asset of all time. Now, let me get to another chart. And here we're looking at Bitcoin in blue, the NASDAQ here, the bar chart in black. And here we have gold at the bottom. And so here is the secular bear for gold. 2011, I mean, I could have put it right here, but I put it right here before the breakout. And so at this point here, gold was basically flat, maybe higher by a couple percent. Look at how much the stock market went up during this period. And also Bitcoin. We know that Bitcoin's exploded. But, and stopping myself for a second, even if we're just eyeballing it here, I'm not a huge fan of these types of charts, but we can see, looking at it closely, how correlated Bitcoin is to the NASDAQ. Because think about it. 2013, we had the 13-year epic breakout in the stock market. So this was one of the strongest years ever for the stock market, 2013. I mean, look at this really strong move here. Look at Bitcoin. I mean, almost went vertical. 2017 was another very strong year for the stock market and tech. So 2017, I mean, look at this here, into this peak here. Really strong move in the stock market and tech. Here's Bitcoin accelerating to the upside, almost going vertical in 2017. And then coming out of COVID, of course, the everything rally. Right here, gold, of course, had the big move, peaked a little after the middle of the year, peaked in the beginning of August. But even after that point, things kept ramping up. And look at Bitcoin after that point, huge move higher. Once everything got going, of course, some of that was technical. You had a breakout. And then if we're just eyeballing it, I mean, look at the shape together. I mean, these are very, very similar here. Very similar. And again, if we think about it in the big picture, gold peaked here, down, of course. I mean, it has been trending up like this, sure. And it did break out here. But over this period, gold was flat for, flat for near 12 and a half years. That's a really long time, people. And look at Bitcoin again. Look at how closely it follows the NASDAQ. Does this look like an uncorrelated asset to you? I mean, who thinks of this marketing trope and doesn't even double check it? Okay, one more thing and then I'll get off my soapbox here. This is interesting. Let's look at ETF fund flows. Oh, look at Bitcoin this year. I mean, it finally broke out. Look at compared to the other year. I mean, everybody's running into Bitcoin. It finally broke out. I mean, that tells me there's a lot of sellers, actually, that you needed all this move here, and it finally broke out. And here we can see with gold ETFs. Yes, this is from earlier this year. This is from, I think, February. Great chart. So, yes, it is kind of old. But, we can guess ETF flows in gold. They have rebounded like this. Not a huge deal, but some. And, of course, Bitcoin flows have gone parabolic. So, as far as an uncorrelated asset or an asset that's, an unpopular asset, it's gold. So, I don't know, people. I mean, it seems pretty obvious to me. Bitcoin is the most correlated asset of all time, and it's not even close, okay? Maybe internet stocks back in the 90s is the best comparison. I mean, if you made money on it, fantastic. I tip my cap to you. You're smarter than me. That's fantastic. But, to say this is an uncorrelated asset, it's not. There's no evidence of that. Again, that's just marketing trope. Gold is the uncorrelated asset. And when the stock market cracks and this crypto mania is going to fall with it, that's when we're going to see gold go fucking vertical. Not vertical. It'll accelerate and then go vertical. Of course, while waiting for that, I'm waiting for that. And I'm getting tired of talking about it for years and years. But anyway, I'm droning on here. Apologize. That's it for the video. Let me know what you think. Leave a comment. And I'll talk to you guys again in the next video. Thank you.